Good morning, ladies and gentlemen, mums and dads, boys and girls. Andrew, Dan, Dornbush Partners, number 49.
49.
I have to say, I didn't think we'd make 50, and we haven't made 50, so it won't give us the kiss of death just yet. But
Unbelievable.
Yeah, we've been uploading some of our older videos onto YouTube, and even over the last 12 months, the change in hairstyles and others in greying. It's been a bit unusual. But anyway, we're not here to talk about my lack of dress sense. We're here to talk about the share stock market. Interesting week. In fact, interesting month. We're up about 4% for the month, so it's been a big bounce back. Obviously, the concerns with Greece and China seems to have settled down a little bit too.
China hasn't stopped though, Andrew, has it? It's still, the market's not strong. It's coming off still. So.
And I know we're probably jumping a little bit ahead here, and Brendan hasn't done the chart up, but what's that China fund that we...
AMP China Growth Fund.
What's the code on that one?
AGF.
AGF, because I think you and I were saying if it sort of went down to about $1.10, because where is it at the moment? $1.25 or...
Oh, a little bit high, around that, $1.30 something.
So if it went back to $1.10, because it tracks the Chinese stock market, that's actually not a bad proxy for playing the volatility that's occurring in
that would be market. A good spot to buy it down at that $1.10.
But again, is it investment or is it a trade? Andrew personally thinks it's a trade, but anyway, that's an aside. And the Reserve Bank did the right thing this week.
Rates on hold.
Not changing rates. And, you know, around that commentary around the Aussie dollar, and basically saying that took out the commentary that the Aussie dollar was too high. So I guess implicitly saying they think the dollar's now at the right price.
Yep, and unemployment, we're looking at those figures at work, and they expect 6.1%, so which is down from their highs of 6.5. But just on that dollar, Andrew, I looked that up this morning, it got to $1.10.3 US.
Wow.
So it's come off quite a bit, hasn't it?
Significant change. And again, you know, as we've said before, companies that have that offshore earnings, you know, and we've spoken a fair bit about CSL lately, and you've got ResMed, and you've got anything with sort of an offshore earnings bent, they're the ones that are going to be doing really, really well at the moment. So, shares, anything that you've been looking at in particular, or you
not really? It's your show today.
Run
I'm just standing here and nodding.
That's what I thought. I'd just give you the opportunity. Look, two that we've been looking at. One is Capilano Honey, and I'll get you to give me a hand with Capilano because I know that you know some of the intricacies there. CZZ is the code, and as the name suggests, it owns Capilano Honey. Share price is off a little bit today. I was just looking before, it's back at about $16. We first started looking at it at 5 and went, oh yeah, that's interesting. Started actually doing something about it at 12, so it's had a bit of a kick along. But they're basically one of the preeminent honey makers. Do they make honey? Producers of honey in the world. And they've recently made an acquisition, Kirkby, is that how you say?
I think it is.
Yeah, but in particular, the special type of honey that Kirkby produce, which is?
Manuka.
Manuka. And what is Manuka honey?
Just beautiful honey.
Apparently it's not as sweet, but the Chinese love Manuka honey. And I think you were saying the other day at Woolies you were having a look, and you know, a little thimble of honey was like $25 or some crazy sum of money.
Yeah, I've been watching the honey. There's not too many specials on honey at the moment, so it's a tight market, isn't it?
It's a tight market on honey. Sticky. It's a sticky market on honey.
CZZ might be sticky shares.
Yes. Anyway, we'll stop the jokes. We're not here for the jokes. Maybe we are here for the jokes. Anyway, so CZZ, the P is not too demanding at around 12 times. No dividend. You're buying it for growth.
Yep.
The big risk is there's a mite, and the customs have actually stopped this mite from actually coming to Australia in May. I think you were saying to me before, around all the ports, they've actually got beehives.
Yeah, beehives to catch these.
To try and catch the bad guys, so to speak. So that's the big risk. As long as AQUIS are on top of their game, catching all the bad things coming in, happy days. But if we do, and because this mite has decimated other bee populations around the world.
But it's the big thing, it's not just honey, that's crops don't get pollinated.
We are, I know it's a family-friendly video, but we are screwed. You know, if bees go,
a lot of pain.
We're in a lot of hurt. So certainly, I mean, CZZ, interesting story. The other one that we've been buying, and there's a bit of a twist to this one, is AHG, Automotive Holding Group. And as the name suggests, they sell cars. They've got about 109 dealerships or something like that, some extraordinary number. They sell all the different types of cars. The twist is that another mob called Charter Hall, which is also listed on the stock exchange, have basically said they're going to start selling off the property arms of AHG. So one of the key faults with AHG is the gearing is quite high. So what AHG have gone to Charter Hall, said, hey, can you sell off some of our properties for us? The benefit to investors is the...
They're going into a trust.
They're going into a trust, and the yield is 7.5%, 8%, something like that. So it's quite a good return from that point of view. And from an AHG shareholder point of view, which is paying about a 5% fully franked dividend, is that gearing comes down closer to 65%. So everyone's a bit of a winner in this one. I've had a few clients say, but you know, with the car manufacturing industry closing down in 2017, is that going to impact car sales? Well, early indications are that it's not. And these guys...
You're going to get on a push bike, Andrew?
Look at me. Do I look like a pushy type of guy? Andrew and Leica, that's a scary thought. But we won't go there. But in all seriousness, I think, you know, and you look at like AP Eagers, which is another one.
Well?
They've done
Just
well.
A stellar performance.
And they don't make money selling cars. They're making money on the servicing.
Yeah.
And let's say the economy goes to poo. People won't be buying new cars, but they're going to try and make their existing cars last longer. They're going to be servicing them more, and that's where they make more money. So we're very comfortable with the AHG story. As you said, AP Eagers has been very kind to us as well. I guess AP Eagers has got a poorer yield, so we're not pushing that one as hard. We're pushing AHG because it's got a better yield to it, but AP Eagers is fine too. So they're two sort of more smaller companies that we like. But, you know, we haven't touched on profit reporting season, and we'll probably spend a lot more time.
I think next week it's really just starting, hasn't it?
Yeah.
Suncorp, not a bad result, 50-cent dividend, including their special.
Yep. So once that Suncorp dividend gets to $1, you can pretty much expect a share price of $20. You know, 5%. But you're quite right. We haven't really seen a lot happening on the profit reporting. So you and Michael in Dornbush download number 50.
We'll be all over it next week.
We'll be all over it next week. I've spoken
Be
a
old
lot.
news by then, though, unfortunately.
Anything you want to cover off on?
No, all good.
All good. Till next week.
Thank you.